Hello and welcome. In this training session, we're going to make sense of homeowners insurance together. Have you ever wondered how your policy protects your house, your belongings, and even pays for you to stay somewhere else after a disaster? In this session, we'll touch on all of that. By the time we're done, you'll understand the 8 standardized homeowners policy forms, what they cover and what they leave out, and some of the common endorsements and discounts you can use to customize a policy. This streamlined overview will prepare you for the Missouri licensing exam and help you explain coverage to future clients in a way that makes sense. By the end of our time together, you'll be able to distinguish among the HO1 to HO8 policy forms. You'll know which form applies to single family homes, rentals, condominiums, mobile homes, and older historic properties. Describe the key parts of a homeowner's policy. We'll break down Section 1 coverages, AD, for the dwelling, other structures, personal property, and loss of use, and Section 2 coverages, EF, for liability and medical payments. Identify common name perils and major exclusions. You'll see the difference between what's automatically covered and what requires an endorsement or separate policy. Explain popular endorsements and discounts. We'll mention a few optional coverages like inflation guard, ordinance or law, flood or water backup, and review typical premium discounts for bundling and safety features. Apply your knowledge to exam style scenarios. You'll practice working through a sample claim question and calculating how much the policy would pay. With these objectives in mind, let's dive into the purpose of homeowners insurance. Homeowners insurance exists to keep you financially whole after a loss. It does this through 4 main protections: the structure of your home. If a covered disaster like fire, hail, or wind damages the house, the policy pays to repair or rebuild it. Detached structures like a garage or shed are also covered, but usually at 10% of the dwelling limit. Your personal belongings. Think of everything inside your home: clothes, furniture, electronics. Coverage C pays to replace those items if they're stolen or destroyed by a covered peril. Limits typically range from 50% to 70% of your dwelling amount, and there are sublimits on high value items like jewelry or firearms. Liability protection. If you or a family member accidentally injures someone or damages their property, liability coverage helps pay legal bills and court judgments. Pets are included, but intentional acts and business activities aren't. Loss of use or additional living expenses. When a covered peril makes your home uninhabitable, this coverage pays for hotel stays, restaurant meals, and extra costs above your normal expenses. It may also replace lost rental income if you rent out part of your home. Keeping these 4 protections in mind helps frame everything we discuss next. There are 8 different homeowners policy forms, each designed for specific situations. HO1 basic policies are rarely sold today. They insure the dwelling and belongings at actual cash value and cover only 10 named perils such as fire, theft, and vandalism. There is minimal liability and no additional living expense coverage. HO2 broad policies add more named perils, like weight of ice and accidental water discharge, and typically insure the dwelling at replacement cost and personal property at actual cash value. They also include liability and loss of use coverage. HO3 special is the most common form for owner occupied homes. It covers the dwelling on an open perils basis, meaning everything is covered except what's explicitly excluded, and covers personal property on a named perils basis. Replacement costs for the dwelling and actual cash value for contents are standard. HO4 renters policies cover tenants' personal property and liability. They do not insure the building since the landlord's policy does that. HO5 comprehensive policies offer the broadest protection, covering both the dwelling and personal property on an open perils basis and usually providing replacement costs for contents. Because of this, HO5 is popular for high value homes. HO6 unit owners Policies insure condominium or cooperative unit owners. They cover the unit's interior, personal property, liability, and loss assessments that unit owners may have to pay. HO7 mobile home policies mirror HO3 coverage but are tailored for manufactured or mobile homes. HOA modified policies are designed for older or historic homes. They insure the dwelling at actual cash value or functional replacement cost and cover only 10 named perils. HO8 is used when rebuilding the home exactly would cost far more than its current market value. On the exam, expect to match these forms to the appropriate property types and note whether they cover open or named perils. Homeowners policies contain two sections of coverage. Section 1, Property Coverages Coverage A, Dwelling, covers the main structure and attached elements like a deck or garage. It should be insured at full replacement cost so you can rebuild if you suffer a total loss. Coverage B, other structures, insures detached structures, fences, sheds, gazebos, up to about 10% of your dwelling limit. Coverage C, personal property, covers your belongings, typically 50-70% of coverage A. Special sublimits apply to valuables like jewelry and electronics. Coverage D, loss of use, pays additional living expenses or lost rental income when a covered peril makes the home uninhabitable. Limits are usually around 20% of coverage A, and this coverage does not reduce your dwelling limit. Section 2, liability coverages coverage E, personal liability, pays legal defense costs and damages if you're responsible for someone else's injuries or property damage. Standard policies start at $100,000 per occurrence, but higher limits and umbrella policies are recommended. Coverage F, medical payments, pays small medical bills for guests who are injured on your property, regardless of fault. Limits are typically $1,000 to $5,000, and the idea is to prevent small mishaps from escalating into lawsuits. Memorize these coverage letters and their basic limits. Exam questions often ask you to identify which coverage applies to a specific loss. Coverage A is all about the building itself. It pays to repair or rebuild your home and attach structures after a covered loss. Here are the key takeaways. Replacement cost versus actual cash value. Most modern policies use replacement cost coverage for the dwelling, which means the insurer pays the current cost to rebuild with similar materials. Basic policies like HO1 or HO8 might settle on actual cash value, which deducts for depreciation and results in a lower payout. Adequate limits. Don't confuse market value with rebuilding cost. Insure the home for what it would cost to rebuild today, including materials and labor. Many insurers offer guaranteed or extended replacement cost options to account for increased costs after a disaster. Attached versus detached. Anything physically connected to the house, like an attached garage, deck, or built-in appliances, is covered under coverage A. Separate structures fall under coverage B, setting appropriate coverage. A limits ensures that you or your clients aren't left short when it's time to rebuild. Coverage B protects structures on your property that aren't attached to the main house. Here's what you should know. Automatic limit. Most policies provide 10% of the dwelling limit for other structures. For a home insured for $300,000, that's $30,000 for sheds, fences, and detached garages. Covered and uncovered uses, garden sheds, detached garages, pergolas, and pool houses are covered. However, if a structure is used primarily for a business or farming, you may need commercial coverage or an endorsement. Small amounts of business property, up to a couple of $1,000s, may be included, but that's it. Loss settlement. In HO2, HO3, and HO5 policies, other structures are covered at replacement cost on an open perils or named perils basis, depending on the policy form. In HO1 and HO8, claims are settled for actual cash value. For exam purposes, remember the 10% default and the fact that non-residential uses may limit coverage. Coverage C insures your stuff. Think furniture, clothing, electronics, and appliances, wherever it is. Key points. Limit. Personal property limits usually equal 50-70% of the dwelling amount. A $250,000 house might provide $125,000 to $175,000 for personal property. Renters policies, HO4, and condo policies, HO6, typically set a personal property limit of the insured's choice. Off-premises coverage. Belongings are covered worldwide, but the insurer may limit off-premises coverage to 10% of the personal property limit. If your laptop is stolen from your car, it's typically covered, subject to the deductible. Special sublimits. Standard policies cap payments for categories like jewelry, firearms, silverware, and collectibles at a few $1,000s. To fully insure these items, you can schedule them with a personal property endorsement, which provides higher limits and broader coverage. Replacement cost endorsements. HO5 policies include replacement cost for contents. Other policies may require an endorsement to pay replacement costs instead of actual cash value. Advise clients to take a home inventory so they can document their belongings and set appropriate limits. On the exam, know the typical percentage limits and how scheduled personal property endorsements work. Loss of use coverage helps maintain your lifestyle after a disaster. It pays for extra expenses when your home becomes uninhabitable due to a covered peril. Remember these points. What's covered? Additional living expenses include hotel stays, meals, laundry, storage, and other costs that exceed your normal spending. If you rent part of your home to a tenant, this coverage also reimburses lost rent while the home is repaired. Limits and time frames. The limit is often 20% of the dwelling coverage, but it may vary by insurer. Policies also impose a time limit, such as 12 or 24 months. Once you hit either the dollar limit or the time limit, payments stop. Separate from the dwelling limit, payments for loss of use do not reduce the amount available to rebuild your home under coverage A. This distinction is often tested in exam questions. Exclusions. Loss of use coverage only applies after a covered peril. It does not help if your home is unusable due to excluded events like flood or earth movement. Understanding coverage. D helps you reassure clients that they'll have a place to stay during repairs. Liability coverage protects you when accidents happen and legal claims follow. Here's what to remember. Scope. Coverage E pays legal defense costs and damages if you or a resident family member are legally responsible for someone else's bodily injury or property damage. It also covers incidents off your property. For example, if your child breaks a neighbor's window while playing ball. Limits. Standard homeowners policies start at $100,000 in liability coverage, but higher limits are affordable and advisable. Many homeowners increase their liability limit to $300,000 or $500,000. To supplement, consider an umbrella policy that adds $1 million or more of liability protection on top of your home and auto policies. Exclusions. Liability does not cover intentional acts, injuries to you or your household members, business activities, or professional services performed at home. Those require separate policies. In an exam scenario, make sure you identify when liability applies and when it doesn't. Emphasize to clients that liability coverage protects their assets and provides peace of mind. Coverage F is a goodwill coverage designed to prevent small injuries from turning into lawsuits. It pays reasonable medical expenses for guests who are injured on your premises, regardless of fault. Key points. Limits. Policies typically offer $1,000 to $5,000 per person. The insured selects the limit when buying the policy. Time frame. Medical expenses must be incurred within a specified period, often 3 years from the date of the accident. Who is covered? Guests and occasional visitors are covered, but you and members of your household are not. Medical payments do not apply to injuries arising from business activities or intentional acts. Coverage F is separate from liability. It's not a substitute for health insurance, but a way to handle minor injuries promptly and avoid litigation. In insurance, a peril is a cause of loss. Homeowners policies either list the perils they cover, name perils policies, or cover all causes of loss except those excluded, open perils policies. Knowing the difference helps you decide which policy a client needs and answer exam questions. The broad list of named perils includes fire or lightning, windstorm or hail, explosion, riot, or civil commotion, aircraft, vehicles, smoke, vandalism, theft, falling objects, weight of ice or snow, volcanic eruption, accidental discharge or overflow of water, sudden tearing or bulging of heating or air conditioning systems, freezing of plumbing, and sudden damage from electrical current. Basic forms like HO1 and HO2 cover only named perils, while HO3 and HO5 cover the dwelling for open perils. Personal property is usually covered for named perils unless you choose an HO5. On the exam, be prepared to identify whether a loss is covered under a named perils policy and to know which perils are not included, such as flood and earthquake. Even open perils policies contain exclusions. Understanding what's not covered is just as important as knowing what is. Common exclusions include earth movement. Earthquakes, landslides, and sinkholes are excluded. Separate earthquake or sinkhole insurance may be available. Water damage, floods and sewer or drain backups require separate policies or endorsements. Water damage from within the home, like burst pipes, is covered under most policies, but water from outside sources is not. Ordinance or law. Costs to bring a damaged home up to current building codes aren't automatically covered unless you add an ordinance or law endorsement. Power failure and neglect. Losses caused by power outages off the property or by failing to maintain the home are excluded. Mold and wear and tear also fall into this category. War and nuclear hazard. These catastrophic risks are excluded from standard policies. Know that separate policies or endorsements are available for some of these exclusions. Being aware of the gaps helps you guide clients and answer exam questions about uncovered losses. Endorsements expand or modify coverage to fit unique needs. Here are a few commonly used ones. Inflation Guard. This endorsement automatically increases your dwelling coverage limit, often 4 to 8% per year, to keep up with rising construction costs. It prevents being underinsured after inflation. Ordinance or law. It pays the extra cost of rebuilding your home to current building codes after a covered loss. Without it, you'd pay out of pocket for code upgrades. Water backup. This endorsement covers damage from water backing up through sewers, drains, or sump pumps. Standard policies exclude this peril. Equipment breakdown. It covers mechanical or electrical failure of home systems and appliances, like your HVAC system or refrigerator, after a sudden breakdown. Scheduled personal property. This endorsement lists high value items, jewelry, art, electronics, at agreed values, removing sublimits, and sometimes covering accidental loss or mysterious disappearance. Other endorsements exist, such as service line coverage and flood insurance, but the exam generally focuses on the ones above. Insurance companies reward risk reducing behavior with premium discounts. The most common discounts include multi policy. Bundling home and auto policies with the same insurer can save 10% or more on each policy. Protective devices. Installing smoke detectors, burglar alarms, deadbolt locks, or sprinkler systems can lower premiums because they reduce the risk of a major loss. Roof and construction. Impact resistant roofing materials or a recent roof replacement often qualify for discounts. Homes built to modern building codes may also cost less to insure. Claims free or loyalty. Customers who haven't filed claims for a number of years and those who stay with the same insurer may receive lower rates. Other factors. Non smoker, senior, paperless billing, and paying the premium in full can also earn small discounts. Remember, discounts vary by insurer and state, so emphasize that clients should ask for all available discounts when shopping for a policy. Before we tackle a practice question, here are a few exam pointers. Memorize coverage letters and typical limits. Know that coverage B is usually 10% of coverage A, coverage C is 50-70%, and coverage D is around 20% of the dwelling limit. Understand named versus open perils. Be ready to identify whether a loss is covered based on the policy form. HO3 covers the dwelling for all perils except those excluded, while HO2 only covers named perils. Know which policy form applies. Match HO4 to renters, HO6 to condo owners, HO7 to mobile homes, and HO8 to older homes. HO5 offers broadest coverage, and HO3 is the most common. Read the question carefully. Exam questions often hinge on a small detail, like whether a policy pays replacement cost or actual cash value. Make sure you note the policy form and coverage amounts before calculating a claim. With these tips in mind, let's work through a sample scenario Imagine a homeowner with an HO3 policy. The dwelling is insured for $300,000 and personal property is covered at 50% of that amount, $150,000. The policy has a $1,000 deductible. A kitchen fire causes $25,000 in damage to the dwelling and $5,000 in personal property losses. How much will the insurer pay? In this scenario, coverage A will pay the dwelling loss up to the $25,000 cost of repairs minus the $1,000 deductible for a net payment of $24,000. Coverage C will pay the full $5,000 for personal property because the damage is well below the $150,000 limit and the deductible was already applied. Total payment $29,000. The loss of use and liability sections wouldn't be triggered unless the house became uninhabitable or someone were injured. When you encounter similar questions on the exam, identify which coverage applies, subtract the deductible once per occurrence, and compare the loss to the coverage limit. It's that straightforward. As we wrap up, let's recap the highlights. Coverage basics. Homeowners policies combine property and liability protections in one contract. Section 1 includes dwelling, other structures, personal property, and loss of use. Section 2 provides liability and medical payments coverage. Policy forms. HO3 is the most common and covers the dwelling on an open perils basis. HO5 offers the broadest coverage, while HO4 and HO6 are designed for renters and condo owners. HO8 is for older or historic homes. Perils and exclusions. Named perils policies cover only the listed causes of loss. Open perils policies cover everything except what's excluded. Major exclusions include floods, earthquakes, sewer backups, and ordinance or law upgrades, endorsements and discounts, optional coverages like inflation guard, ordinance or law, water backup, and scheduled personal property fill gaps in a standard policy. Discounts for bundling, safety devices, and loyalty help reduce premiums. Take a few minutes after this session to review your notes and make flashcards for policy forms and coverage letters. This will cement your understanding and boost your confidence on the exam. This concludes the homeowner's insurance module. When you feel ready, move on to practice exams to test your knowledge. Reviewing sample questions and explaining the answers out loud will reinforce what you've learned today. Remember, the more you practice, the more comfortable you'll be when the real exam day arrives. Thank you for joining this condensed homeowners policy overview. I hope you feel more confident navigating these policies and helping clients protect their homes.